What's going on, everybody? I hope everybody had a great weekend. We have a lot on watch, just like last week. It's going to be a nice, big week with lots of opportunity, but with that means intense focus. So it's not about trading every single stock that you see. It's not about, trying to nail every single play. It's about finding the best opportunities given the type of trader that you are. What my top watches may not be the best trades for you. What somebody else is trading may not be the best trades for me. But what you need to do is just fine tune and figure out where you have the most success at and stick with that. Where you have the most failures. Sometimes for me, for example, I make a ton on low float type names and those types of squeezers. The black swan type trades, things like that. I'm usually very, very good at those, but I also lose a lot on those. I end up overstaying. I end up, taking off some for a decent gain, and I sit there and I say, okay, well, you know what? I'll let this one work, and then that's it, and then it just completely unwinds, or they raise money, or something like that. So, for me personally, it always just works better for me to trade the big momentum type names smaller, and I realize that. And then when it's earnings season, things like that, that's when I really shine, and I really like these bigger types of names that are out of their normal range, stuff that normally might trade only a buck or two, that's trading 6, 7, or 10. A couple this week would be similar to EA or MAT on Friday, normally stuck in a pretty tight range, and it was up 2-3 points. Also Grub, GRUB, and a few others like that. So that's just one kind of thing to think about. Just kind of fine tuning and figuring out what type of trader that you are. Don't force trades that somebody else is good at. That's another thing. A lot of times you'll see. Eric, for example, Eric Wood, great trader, and sometimes we're on the opposite side of the trade. But I'm right in the short term. But his goal is not the short term. His goal is in the long term, maybe 2 or 5 or 10 days from now. So although my trade is an intraday thought and it's right, we're both right at the end of the day. So keep that in mind. Anytime I try to force myself to think about maybe a 3 or 5 or 10 day type picture, that's just not a type of trading that fits with my personality. And so while it may work for somebody like Eric, it doesn't work for me. So therefore, I kind of avoid those types of situations and really look for the intraday type moves. The only time I really swing stuff is in my IRA, where I look for good technical setups, things that have reported good numbers, or just something that has a good story or catalyst forthcoming, and potential opportunity there. And normally that's, like I said, that's all on the long side versus something like Eric would do, for example, on the short side. So tomorrow I'm going to be looking for quite a bit of trend join type names. Personally, I prefer the short side. There was a lot of great short opportunities on Friday. But what I've been seeing a lot lately is just let things kind of dip and then join the trend. And that'll work until the market changes. For example, NYT this past week, nice breakout this day here. But the idea the next 2 days on scan was just a weak open and trend join. You can see each morning it kind of opened a little bit lower. You can see the wick here. And then it ended up closing towards the highs. Open a little bit lower, ended up closing towards the highs. So typically when I say I want a weak open and a trend join, this is what I'm looking for. I'm looking for an opportunity such as this. And this is a kind of a perfect play out of what I'd like to see. And so that's when I'm writing that on the scan tonight, when you see that, that's sort of the idea behind what I'm looking for. So and I had another note in the scan tonight that sometimes I put a lot of charts up there, especially on Monday. There's a lot of action, there's a lot of opportunity, and it's not that I want to trade every single name. It's just that When I see this once, I'll go look at this. I'll type it in on DAS, go here, click the 1 minute. I'll look at the, how it's set up. I'll look at the key areas. Okay, it broke out here late day. Started to put in a little bit of a base over here at 1080s. It broke out from the 1070 level. You can see a top here, and a top here. So I know right away if I see that on Monday and it's consolidating and it's moving off of a base at 1070s, I already know that that's a good play for me. I already know I love it versus 1050s. I already know that if it's at 1080s, I like it versus 1070s. And I'm going to remember that. So now that I've seen it once, good, done, next. And I can keep on going down, and I can remember that on all 20 of the tickers. I can, if there's even 20 here. I think there's probably only 12 to 15. But that's how I do it. That's why I do it. And, for some, that might be ticker overload. But ticker overload in the sense that most people think, oh, you're trading too many tickers. I'm not. I'm only trading 2 or 3 names, and if I do trade more, it's because I got on the right side of the name. So I might put on a little bit, and then the trade starts working, just like CLF on Friday. CLF, I got on the right side, and I had a nice little trend throughout the day, and I just kind of let it work until I had a lower high, and then I moved on. But it wasn't an active trade. I wasn't sized into it. And the same thing, something like SKX, where I was short, and I just put some on into the pops, and I made it all the way down to here. Well, actually, I didn't. I should have covered it all down here, but I ended up covering into this this pullback over here. But once you're on the right side, that's it. I put it on the right monitor, let it do its thing, let it work, bell to bell, or at least until the trend starts to shift. So, at any rate, that's sort of the game plan. Focus 2 to 3 names out of the gate. So, EGAN rather. I've already gone over this. So, you can see the breakout, 1070s. A newsletter came out with this, so that was the volume there. Not your typical piker type newsletter. So normally it's not like a buy and then 3 minutes later they sell. So I don't put it on the same level as some of the other newsletters that we talk about. But what I'd want to see is it to come back, retest where it broke out from. If it starts to hold, then I'd be interested in a trend join. Then this has room for 11, 12, maybe a little bit higher. EYEN, I'm on the tail end of this trade. This was, as you guys probably saw, I tweeted out and I got long in the 420s, 430s. This was a trend join type play, similar to the AXSM idea, joining the dips here, and similar to the most recent, which I'm drawing a blank on, starts with an A, AMRS. Similar to the kind of the thought process that I have right now on this one, where joining week opens until the trend breaks. So that was the original thesis on this EYEN breakout, but it just happened to work out in within 3 days. I bought this day, and 3 days later, it was up $2 a share. So I posted that I was swinging that on Twitter, as you guys likely saw. I did not expect this breakout at all into the close, and I was actually on the offer 680s. I think it was 679.8 is the high. But it swiped, which again, sometimes it's good to have some offers out there, some wish orders we call them, just in case something like this happens, because it breaks out. It went almost $1 in a couple minutes. And then it came back down, and then it went again. So I ended up selling into this ramp. And then there was a pretty big seller down here after hours. I think it was about 25,000 shares, 22 or so after hours. But I ended up dabbling back in a little bit from those 650 sells. I don't know why there was a seller there. I didn't see any news. But I just put that back on a few because I got down to about a quarter size left into the close over here. So I went back to about a third size. I still don't have very much left, but overall, fantastic trade, and I'll probably be done with it in the near term. COTI with a T, not Cody, odd stock trader. But this one was nice. Nice opportunities all morning. I mean, you had the short side opportunity, and you had pretty much a trend join after 11 a.m. You can see Flushes, starts to hold, comes back, VWAP retest, and starts to break out. So we talk about this a lot. First off, you can see the nice little ABCD pattern. You got the morning move, pull back, higher lows, and it starts to break out and move a little bit faster once it gets over that breakout. But what I look for in this market is action like this, where it consolidates around VWAP, breaks through. And this is not just a no-brainer buy. What I want to see is it retest and basically show or confirm that it's going to hold a higher low. And at that point, I can buy the dips with a risk off of VWAP cautiously and scaling accordingly. So, that doesn't mean I'm just going to go all in and risk towards VWAP. It means I'm going to dabble. And if it's right, I'll add, and so on and so forth. So, similar to EGAN, I'd be looking for a weak open, potentially come back, retest these 910 levels, 920. As long as it holds over that, I'd love to join the trend. I always want to see stocks pull back, but I want them to also stay strong. I want them to stay in trend. Because if they're breaking trend, then obviously you're going to just kind of be adding into a name that's coming back. So we'll see if that happens. Otherwise, if we start to get a little bit of resistance in the 920s, 930s, and it starts to fade off, then I could use the highs as a guide and fade it. But for right now, I like the volume, 40 million shares. We should have a great opportunity. I'll be watching. Snap, big miss for me. I did see it, but it was Snap. I wasn't really expecting too much. But I feel like there was probably a lot of 9 or option sellers kind of selling the 9s all day, and then they ended up having to buy in the open market to kind of cover their position. They probably got a little too excited, and then it ramped through the 9s. So in a situation like this, I'd love to either see one of two things: either a weak open, retest towards that 9, maybe 890s, and then rally back, or gap up, 920s, rip to 950s, little parabolic, and then pull back. I would compare this type of trading to GE. So when we trade a GE, I think we're going to have maybe 2-3 days of good action on this thing, more, and then it'll end up fading off the radar. CLF, similar. This is a perfect example of a trend join, and we talked about this on the last play with the washout under VWAP and then kind of dips versus VWAP. They had an upgrade late day. I think it was 1325 or 1360, something like that. Mid 13s. And I think it was Jeffries, if I remember correctly. But it ended up having a little bit of difficulty with VWAP here late day. So what I'd be watching for is it to base, maybe pull back sub 1170s. I would consider an entry. And then assuming or anticipating that any washout under this level is going to come back. And then I'd probably add if it started to get some momentum over 1180s, 1190s. Matt was nice. Matt, I started in at 1550s, which clearly was a little bit early, but it was a starter position, a feeler trade. And like I explained to the guys in my room, sometimes people, I only had a starter and I still lost my, a starter is a starter. A feeler is a feeler. So, you're just getting in there to kind of feel how the trade is. If you're going to be short 5,000 shares, a feeler is 300 to 500 shares. It's a fifth size, fourth size, or less. And, in a situation like this, you need to give yourself room. You don't know. It could keep on going and going and going. So usually what I do is I just dabble in there, put a little feeler in there, see what it does. It's not an add. It's not a situation where you just kind of, okay, I'm going to add and then add and then add, and oh, great, it worked out. Not at all. What I want to do is see it rip, pull back, retest, fail, and at that point, and as you guys saw in the chat logs, at this point, this is when I started to scale in versus the highs. So now I have a set risk, or at least a mental risk, where I'm making a plan based off the highs. And then each time that I add in, I'm kind of lowering my risk and lowering my risk. And then any flush, I'm covering around a core. And obviously, I covered this one too early, unfortunately. But This had a nice consolidation. You can see higher lows, higher lows, higher lows. Nice setup here. If this still had another hour or two left to close, you could have had a nice ABCD breakout. But this is what I call sometimes like the transitional day, the transfer of shares. And, there was a huge gap. Everybody that wanted to sell could sell. New shorts may come in. New sellers are probably out. New buyers are in. And so then come Monday, Tuesday, we'll actually have the move, which is a $1 or $2 move, something like that. So we'll see what happens with that. If you guys are confused by what I'm saying, MGNX is a perfect example. If you guys remember this day, I know it's got a huge candle, but for the most part, the move happened the days after. So if you go back, compare this to Matt, right? Where, yes, you had the morning move, but for the most part, it was like a transitional day where transfer of shares. And then the move happened over the last couple days, and obviously it was pretty ugly. Came down towards the 21s and then some. So we'll see what happens with this one, but that's not the point here. Point is on Matt, we might have that transitional day where we then have the move in the next day or two. I think that this 1510s level is going to become an area of interest. So if it's staying heavy at 15s, I'd probably be using this 1510, 1550 as risk. If it starts to break out over 1540s, I'd probably be using 1520s, 1510s as risk on the long side. And you can kind of see where that consolidation area comes into play. ARWR, this one's a nice one. Monaco trader Louis has been long this thing, and he's been talking about it and holding it, and so nice trade to him. He has been holding it for quite some time. I think he bought it after it unwound the last time when it came way in on the after this action. But regardless, beautiful setup throughout the day. This is another example of using VWAP to your advantage. This was an idea late day where if VWAP started to reclaim, I liked it versus VWAP as risk. So a lot of times they will come in here because this is a level that everybody uses. And so everybody's like, okay, I'm going to stop if VWAP cracks. And then they stop everybody out and then they reclaim it. And then the squeeze is on. So you can see a nice ABCD setup right here. Overall the whole thing is ABCD, but even late day right over here. And this is what you should be looking for, is higher lows under a common peak, and then kind of anticipating that peak versus these higher lows. And so that worked out really, really well. In a perfect world, tomorrow morning it pulls back. I'd love to see it pull back to the 1530, 1540s. Not too much lower than that. I feel like if it pulls back too much, then you're kind of getting into the momentum fizzle kind of area, and if it gets into that level, sometimes they don't come back. So we'll see what happens, but that candle's great, big one, and I think that if you look at the chart overall, this 15 break was actually pretty big. I mean, if you look right across from here, ignore this 2 days over it, but 15 top here, 15, 15, 15. So that's pretty big. And then this top over here was 16. So I think once it gets past that, if it does, then you're back into kind of not necessarily blue sky territory, because that would be 52-week highs, but you're back into a level with a lot of room to run. It's not really a gap fill since this all happened within the day, but hopefully you get the point. PYX, nice opportunity into the close. This one's just difficult because you could get long. This is a nice setup right over here, and then it breaks out, and then it just fades off. And it doesn't just fade off. It starts to peak out at VWAP, starts to fade off, and unwind. It actually goes from a nice breakout to an unwind, and it looks like trash. All of a sudden, it's back at the highs. So, like I wrote on Scan, it's just an awful intraday trade, and you really need to come at this with a big picture type thought process. Same thing like with overstock. If you guys have traded overstock, it's terrible intraday. And when it starts to look good for a breakout, you got that one breakout. If you don't sell, you're going to be chopped around, and then it breaks out. But in the meantime, it trades like this, and it gets you out only to kind of laugh in your face. So, for example, I missed this breakout, but I did trade it. I actually bought 1815s, 1814s into the close, and then sold right into the close. But if you bought that breakout, you get screwed. You buy the panic, you're sitting pretty. So just kind of keep that in mind. Think big picture. Think 50s and $half marks rather than I'm going to risk 10 cents or 20 cents because you're going to get chopped out of this thing like crazy. But good eye there, P-Mill. He's been a very good asset in the room with some bigger picture ideas for those of you guys that are not looking for just like scalp. I personally don't want to just be in, out. I want to be focused on bigger picture. SHMP, don't really need to go over it. Just same things I wrote in the room or on scan here too. But I took the swing trade. Just look at the chart. Obviously, if you have questions about this name, if you're wondering if you should be long or if you should be short, the answer is you should ignore it. If you have to ask what you should do with this, or if you have to ask an opinion here, it's in a void. The stock was 2 cents. It almost hit 70 cents, or it did hit 70. It's a very short squeeze-ish type of name. I traded it really well. I was very happy. I sold some into the pops, sold some into the 65s, and I sold some right over here into this last failed follow through, kind of anticipating the fact that maybe it pulls at the close, but I also got a little nervous that maybe I had a little too much for the fact that they could put a skull and crossbones on it anytime if they wanted to. But the fact that it was just 69 and then it was 47, I actually bought into this washout and held those ads over. Just because I had gotten down to such a small position right before the crack, I felt like it was a good risk to reward ratio. So trade cautiously. Again, if you have to ask, if you need an opinion on it, just take it off your radar. Not to be messed with. AMRS, I kind of already talked about this. AMRS, nice intraday type setups here. But as you can see, these moves, they're using those breakout points to their advantage. They're selling into the sixes, and then they're letting it crack. This is the type of situation where it's not on your timetable, it's on theirs. So they're going to do what they want, how they want, when they want. And, you can even see this AXSM. I kind of had the same thought process. After this washout day when they saved it, I said that I liked all dips as long, just based on the kind of the wicks alone. But I felt like they were it was gonna come by surprise, is what I said. I thought that the breakout would come by surprise, and they'd probably pretty much trap / fake everybody out in the days before the move. And as you can see, it kind of starts to break down, and flushes, comes back down, flushes, comes back up, and then boom, takes off. So I'd be using the same sort of strategy with AMRS, kind of knowing that they're probably trying to filter out people, and then at some point they probably swipe it up. So I'll be looking for entries along the way, but also staying out of the crowd. So other than that, NGTF, another one. This one, I don't even know. The OTCs are finally coming back, which is nice. I guess they haven't gone away for a while, but I've just been noticing them more and more. COTI had a nice entry or a nice alert here. I got long mid-30s. So this was a nice little one. On Friday, EOLS. I got short pre-market and covered into the flush at the open. I had a few left, and I covered it basically over here. Consolidation day, this could go either way. I don't have an opinion, but what I am going to do is join whatever trend it is on a day that it is either up or down 50, 70 cents. I feel like it's going to have a $2 to $3 move that day. But one thing I don't want to do is trade around VWAP and kind of anticipate which way it's going to go. So I'll be patient. And then the next the next three are just week open type trend join plays. The 6% unwind or continuation scanner that I have running during the day. This one's been major worth an eye lately. It's been working really well, and I would highly suggest watching it during the day. I've made a lot of good plays from that, and so basically, if it hits that scanner, then I watch it the next day, and that's why I came up with the NYT trend join type play that we talked about when I started this this video. This was all over that scan that prior day. So basically what I do is I look for the ones that were on there. So FET was on there, nice trender all day. I look for ones that hit it a lot, that keep on coming back. And so basically I look for it, pull back, and then if they hold it within a few percentage of close, then I look to join the trend. And that's been working really well. So that's the idea with FET. IMGN as well. If this starts to base at 560s, usually I look at the prior day's VWAP and use that as a guide. And then Kara is always a known runner. You guys should know it if you've been trading for the past 6 months or 12 months. I mean, it's been a nice runner in the past, but it always likes to have multiple days of range. As you can see here, this 13 to 14 all the way up to 17. So we could be in for 18, 19 push if we wanted to. It looks like there's a little resistance over here. But I'll be looking at that. Week opens, usually, like I said, VWAP, 1650s. I don't know that I would want it to go about that far down. Maybe 1660s, 1670s. And then the last couple, I'm thinking unwinders, GT, higher the better. Ideally a little push and then fill. Fell back under 19s. VCRA was beautiful. I got short in this area over here. I had a starter feeler like we talked about into the first push, and then I started to scale, and then had a nice unwind back to VWAP. Then you can see VWAP reclaim, retest, confirm, and nice little breakout. This obviously is hard. I mean, these types of pullbacks. So, when they have $9, $10 a range on the day, obviously you're not going to be sized in huge, but great opportunity, good trades by P-Mill and Josh on Friday on this long trade based off of this VWAP kind of consolidation and breakout. No heavy bias on this one yet, but I will be watching for a trade. And then Twitter, last but not least, the idea on Friday was short into whatever move happens out of the gate, or basically react, take the opposite of whatever move happens into the open. And so we had a nice pop, and so I'd be looking for the same thing, higher the better, and then potential fade. I think these 30s are going to come into play soon, maybe get a push towards 30, 20s, then fade back under 30s down to the 29, 28 level short term. Especially if the market comes in any. So that's what's on my radar tomorrow. We got a lot of great opportunities, especially in this market with this range. Even Grub and names like that lately. It's been some crazy range. Where it comes all the way down and then gaps up the next day. And same thing. EA came down on the earnings report and then breaks out. This is a perfect example. You can never. Good earnings does not mean up. Bad earnings does not mean down. Good earnings could mean down, and then the next day they rip back up. So whatever the case is, right now, follow the price action. Be cautious. Don't fight trends. If you have any questions, reach out. Hopefully this video is helpful. And like I said, I'm not looking to trade them all. I just go through. I went through my thought process, looking at the levels, looking at what interests me. And hopefully it was helpful to you guys. Catch you in the room tomorrow.